Hey traders, Crash Alton here, bringing you an overview of my Impact trading system. This is a multi-technique based system for trading the futures. 90% of the time we specifically focus on the NQ and the ES on our structured trade setups, but it can be used whether you're trading CL, gold, bonds, anything. It is a multi-technique based system with 4 components: the Navdar component, the iStructure component, the iSnipe component, and we include some Bookmap order flow analysis that enhances our trade setups. Looking at the Navdar system, this is a time and price based cycle methodology in the same way a pilot does his flight plan before flying and then uses his navigation and radar system during the flight to find points in space. In similar fashion, the trader creates his pre-flight flight plan, which creates a trading game plan on searching for pre-identified price targets that fall within a defined and a predicted time window. That's right, finding pre-identified price targets within a defined time frame identified before RTH. The iStructure is a system of about 14 trades that fall within larger structural time frames, and it is designed to produce 50 to 100 point trades. Specifically, when we're looking at our time cycle rotations and we have a idea where in space from one time to another price is going to move, we can hold on to our trades longer and catch 50, 75, and 100 point trades. The iSnipe system is a shorter structural time frame designed to provide trades that incorporate 20 to 40 points. And if used correctly, like I'll show you for our analysis on the 23rd of February 2024, this last Friday, we can sometimes catch even 100 plus points off of the iSnipe system, even though it is designed to be a sniping system. And then for Bookmap, we incorporate our own specialized use of order flow and their market pulse indicators, again to enhance the above components. Most trades are in the direction of the trend. Using all 4 components together gives us enhanced confluence. It allows us to leg in and leg out of trades to where we can take some profit, work with the dealer's money, and then let our winners run to gain those 7,500 point plus trades. As far as contact information goes, please find my email here below. You can reach me at crash@impacttradingsystem.com. We're on Discord. We have a trading room, which is Impact Trading. You can look us up there, or you can DM me on my personal account, CrashF16. We're also on YouTube, Instagram, and X at Impact Trading System. Now, briefly, before I go too much further, let's get some of the disclaimers out of the way just for legality purposes. I'm not a professional. I don't offer trade advice. You got to do your own research. Past performance is not indicative of future results. I cannot accept any liability whatsoever for any loss or damage you may occur. Now that's out of the way, let's focus on the first component of our multi-technique based system. That's the Navdar. This is the sweet secret sauce that we use to hold on to trades. It is a combination of several systems that have been put together over about a 15-year period by myself, but the data that is used for this goes well beyond 15 years. From a time cycle point of view, we pre-identified, pre-RTH, a spill pattern that would happen at the market open. Now recognize I'm looking at the MNQ chart on a 1 minute chart. This is our iStructure chart. I'm on Pacific Standard Time, so the opening bell is around 6:30 down here. You'll have to convert times to your own time zone as you process the information in this video. The first hour, we know going into the trade, we look for liquidity zones on Bookmap. We identified some liquidity zones at this upper level, which match some of our pre-identified price levels. So it was a pretty easy trade. I think pre-market, I had over 200 points coming into the market open, which is nice because if you're working with the dealer's money, it gives you a cushion for the rest of the day to make some trades. Now, we pre-identified that we would have a spill in the first 15 to 20 minutes of the market open. That would be in the up direction. And then from the next cycle rotation, we knew we would be looking for some low at a confluence of price points at this time frame around the 8 o'clock time frame. And that did actually happen to occur. We also, from a time point, expected to have 4 points. After we met the AM low, we were looking for an AM or a lunch high. This occurred within 8:50 to 9:10 this morning. And we also had pre-identified that we'd have a minor low right around the 8:50 mark, which helped us to identify this ABC flag pattern up into the AM low. And then from there, we were looking for our next turn, which was going to take us to another low of the day. This was going to be identified right around the 11:30 Pacific Standard Time. And then we knew from there we would have a higher price point or a PM high that would occur somewhere around the 12:30 Central Time frame. So you can see that we combine a multi-day, all right, time cycle rotation in conjunction with a 4-day intraday cycle rotation. This was the last day of the multi-cycle, and so we knew that coming into the last day that we had already met all our multi-day price objectives. And when that occurs, when we go from the end of one cycle to the beginning of another multi-day cycle, price has to pull back in order for us to keep a trend going. Now, over the last 12 years, the market has multi-day statistics of having a positive cycle 90% of the time over the last 12 years of history. So we use that information to help us find those price points based off of 12 years of history. The clock rotations from the predictive time point of view come from a couple 100 years of data, actually all the way back to the market time when it first started trading, and then even some information before that. So very interesting, very detailed, very complex, but again, it does give us cycle rotations to find price points within a time window. But coming back to the multi-day example, we could find that we were looking for one turn to another turn. This happened to be 222 points. So off our iStructure chart, we have some other things that help us to identify price points and action points within our cycle rotations. Again, we knew that we were at the end of a multi-day cycle with price points already being met for that multi-day cycle. So we were looking for a pullback. This pullback actually ended up being over 200 points. Our 1-minute candles are color-coded with a trender that enable us to see going from strength, which would be blue-green candles, down to yellow, and then transitioning into very weak candles, which are red. We have 2 clouds that are identified on the screen. I recognize that this screen is very cluttered, very condensed, but it is designed just to give you some details during this overview explanation. So we have a base cloud, which is identified between this yellow Fox 2 line and the red Viper line. This is green on the way up, shaded red on the way down. Our guns cloud, which is the other cloud we have, is lime green and this pink color. When we see that the guns cloud transitions down below the base cloud, that is a sign of weakness, which is in conjunction with the color bars that we have on the 1-minute chart. And in addition to that, we have a transition sell signal with this arrow down that shows us that we've had a double top up here and we're transitioning from the green to the pink cloud level. We know that as the pink cloud level goes below the base cloud, that we will eventually look for a pullback back to this blue eagle line. And we will take a first touch trade, which we will call the eagle short in this example. As we continue to find price all the way down, we come into another one of our structured trade setups called the vertical DOS. Vertical, deeply oversold. This structured pattern produces between 40 and 100 points. Our targets, our exit targets after we leg into this trade, is looking for a pullback to the yellow line on the base cloud. That's target number 1. Target number 2 would be the eagle line. Target number 3 would be the Viper line. And target number 4 would either be something that would be a conjunction of the white Mustang line, which for today's purposes actually happens to be in the middle of the base cloud. But we would also use a Fibonacci as the exit point. And you can see that as we take the low to the high, the high to the low of the morning, and we do a Fibonacci retracement, we can see that price actually comes and hits that fourth exit target here right between the 61.8, right around the 61.8 line. As I told you before, we knew that we were going to have a minor low between these 2 points, and we did just in fact have an ABC pattern that continued up. That ABC pattern, in conjunction with knowing that we were going to be finding a bottom here at this 0.3 low, helped us to identify other points of entries into the trade. We can identify from other structural setups, M formations at the top, M for murder, breaking down below the M, W's on the way up, breaking out of consolidation patterns. We can look at this from the point of view of an impulse move up, a flag pattern down, and then the second leg of that flag pattern. You could buy, if you did not identify the lows down here, if you didn't want to catch a falling knife, you wanted to use the right-sided pivot rule, you could either get in where the next 1 minute bar does not make another low, so that you have a higher low. You could take the buy arrow that happens with our guns cloud transition from pink negative to positive green. You could wait for the flag pattern to develop and buy the low at the time frame of our minor high, and then continue the move to leg out at the transition points that we identify here. And let's just take a quick look at price points, because we'll calculate. I told you that we have repeatable trade patterns every single day based off of structure. And I told you that the Viper trade basically gives us between 40 and 100 point trades. If you took the trade at the bottom, which I will help identify off of Bookmap and the iSnipe chart, in addition to the structure that we have here, but you will see that if we took it up to our first price target, that would have been 78 points. If you took it and held it to the Eagle line, which we said our next target was, that's an 86 point trade. If you hold it to the third line, which we said was the third target, that's 112 points. And if you take it up to approximately where we peak out close to the Fibonacci level, that's 122 points. So this is, again, showing you that we have trade setups that take you between 50 and 100 points, and we teach you how to leg in and leg out, let your winners run for the majority of the time. This price from the high to the low took us and provided about 200 points to trade. So let's look at how we can identify. Again, this is the iStructure chart. We have a structural pattern here that we're looking for. We have a structural pattern that we're looking at for here as well. This was a double top, M for murder formation. But I want to take you over to the iSnipe chart, which is a plug and play that anybody can use on their chart if they want to. We're identifying at 6:30 time frame up here that we begin to roll over on the iSnipe chart. We get a consolidation pattern. All right, this is where the spill occurs, and we can see in this consolidation pattern that we have a transition from a positive blue background to start getting into red backgrounds. And you can see that the levels of support that we have, we call these ITS lines. Each of them have a different value. We start with a 4, a 6, a 10, a 15, a 20, etc., all the way down. And we have structured trade setups set up off of these lines. But as we are peaking out, we give ourselves a 6 to 8 minute no trade window after the market opens. And then we really kind of want to identify where that spill ends in that first 15 to 30 minutes of the market open. These structural zones here help us to find that. And you can see, again, we transition from a blue positive background for the uptrend to start looking at a red negative trend. And you can see the lines go from the positive colors, the blues and the greens, to more of the yellows, the oranges, the pinks, and the purples and the browns. And we have something called a first pullback rule. And we don't usually take anything until we see some of the negative bear lines starting to develop. And we take the first pullback of the bear 6 line, which is identified by this orange line right here. Okay, that trade, if you happen to get the first touch pullback of the 6, and we teach to have a 12, a couple different techniques, but the most conservative approach is to have a 12 to 15 point max stop. But when we get into the first touch, first pullback, we use these fractals here, and we can identify something and actually have something less than a 5 to 10 point stop. We find this point up here on the first touch of the orange line let the fractals show us it will break down below, and then we'll put our stop to trail the next line above. If you want to go more conservative than that, then you basically can keep your stop below the line that you entered off of. If you entered off of the orange ITS 6 line and you pulled your stop down to that point space, you would never get stopped out till right about here. And if we look at that trade alone right there is a 42-point trade off of a sniping system. If you held the more conservative approach, not more conservative, but the approach where you could gain more points, and you actually had a stop between around that 15-point move, or that range that I told you about, the distance from the orange line to the pink line is only about 10 points. So having 12 to 15-point stops would keep us above this orange ITS 6 line and keeping us on the pink line all the way trading down. If you were to follow this, and I'm going to shrink this chart down just a little bit, but if we follow that trade, okay, and we look for a first touch, first pullback rule, we have two ways of trading this. Either we keep the stops above the 10, in which point we would never get stopped out until right around here, okay, and that's about the same price number of points that we would have had. That would have been a 41.25% trade. Well, once we see these bear lines starting to produce, we take the first touch of that. So if we happen to be the most conservative and we got out at the orange line that we got in at when the price came back and retouched the same line of entry, then we could have gotten out of the trade here. We could have entered on the first touch of the 10 and then held it until price came back and touched either 12 to 15 points above that line, which would take us up to right about here. So right above where price came to when it tagged the 15 line here. So we could have stayed in the trade that way, or just spread this out here a little bit. We could either take the trade here and get stopped out when price came in here, or if we kept it again at that 12 to 15 point area, we actually would have been able to follow the trade all the way down. And you could see that if we stayed in that trade, we could get that 100 points. If we got out, either because we were taking the exit on the 6, exit as we passed through the 10, but we took the rest of the entry rolls, which is a first touch of the 15, then you can see that once we entered into this first touch of the purple line, again, we're looking at first touch of the 6, then first touch of the next line above that, the pink 10, and then the first touch of the next line above that is the 15, and you hold that trade down to the next line, which is the orange line above us here. You can see that we would have held the trade. It's incredible. I have to shrink it even further to be able to show you how many points we could actually trade off of this system. I'm just going to take it out here to a larger view so we can find the low down here. So we took that trade at the first touch of the ITS 15 line, and if we did that, okay, first touch right here of the purple line, again in order, just because I moved the chart around, I want to refresh what we're talking about. First touch of the orange line, first touch of the pink line, which is the 10, first touch of the 15 line. That trade alone, taking us down to the next purple line, would have given us 106 points trade with no heat, because we were staying within a window of 12 to 15 points above where our entry was. And what we do is we trail the stop. So we leg out at some points, some structure points of confluence, but we keep our stop above where we entered, and we continue to trail it down. So in this case, we entered on the orange, on the purple line. We could continue to follow the purple all the way down. We could do it at the orange line, which is one ITS line above where we entered. A couple different ways, depending on how conservative you want to do it. The point of this is that just off of the first trade alone, off the first touch of the 6, we ended up getting 40 points. If we took the first touch of the 10, we didn't get quite so much. We would have gotten stopped out. But then we took the first touch of the 15, and we're looking at something that's over 115 points. So that's just an idea of what the iSnipe plus the iStructure system gives us when working within the Navdar system of point-to-point rotation. Now, briefly, I want to just show also a picture of the Bookmap order flow, because I want to show this spill high and I want to show this bottom. Now, when you're looking for bottoms, we showed you that we were looking for a structured trade setup for a reversal in this time frame here. You do not want to catch a falling knife when you're doing a reversal trade. So we want to have some points of structure that enable us to find something in confluence with price targets. So we have 3 points of confluence. We have a roadmap, okay, that shows us time windows. We have price targets inside of those time windows. And then we have a structured trade setup off of the iStructured system. But then on top of that, we have an iSnipe system that shows us that down here at the bottom, we can see that we have based around a major structural support line. And we start getting into this rectangular pattern where we can look for a consolidation level to break out of, and we can take a trade there. Or we could look for something that a lot of people discuss as the Wyckoff spring. You could look at this as a W formation breakout with basically an inverted head and shoulders with a peaky boo, which is the head, below the consolidation window here. If we're looking at this point specifically, we can look at the Market Pulse VPI that gives us a very specific trade setup. So let's look at that. And let me pull that over to this window here. When looking at this, you can see that in the morning where we had the consolidation on the iSnipe channel, the double top that we showed on the iStructure, and then we began our color-coded bars down all the way down to a low down in this time frame. We have a double bottom, and you can see that this double bottom right here and this top right here, this double top, off of Bookmap, there's something called cumulative volume delta, which we take a look at. And you can see that we peak on the cumulative volume delta here at the AM spill. We base down here and peak out at the bottom of this valley at the low, in which we can use structural setups in addition to our time rotation, in addition to our iSnipe system to help find a low. But I specifically want to show finding a low here, looking at it on Bookmap order flow. If we add something else called the volume pressure indicator, when we see a spike, a red spike down, that is co-joined with the cumulative volume delta peaking at its lows from RTH so far, this is an excellent point to leg into a trade. So when we see the confluence of the VPI matching the cumulative volume delta, all right, we will then also look at this consolidation zone around this major structural zone here. We also have a change in background going from red to blue. And we also have the building up of the ITS lines, letting us know we're coming from a negative momentum to a positive momentum trend. So all of that together basically shows you the 4 components of our impact trading system. We've already been going for about 24 minutes, so I don't want to talk too much longer. I want to keep this video under 25 minutes. A lot more that we could talk to about structured trades in here, but I'm going to leave it at that for now. Come reach out to us, learn more about our system. We have very precise entries. Again, we never need more than about 10 to 15 points stops, and I always recommend using stops. And then we're looking between 20, 40, 50, 75, and 100 point trade setups within our time cycle rotations. So look us up online. Enjoyed talking to you. Crash out.